Hey folks, my guest today is Albert Santalo. He is building a low-code development platform called 8base.com. Albert, you ready to take us to the top?
Absolutely, Nathan.
All right, is Bubble, there is $100 million, is Bubble overvalued or undervalued?
I don't know the valuation, but I can extrapolate it. No, I mean, look, we're all going after a very, very big opportunity in the world. So
yeah,
Bubble's done a nice job.
You've edited your sort of 5-word thing because you've been on the show before. So now it says a low-code development platform. Maybe it was last time too, but I believe you actually started like doing like custom work, but you know this space well. You founded Care Cloud, which is now publicly listed, but healthcare IT SaaS. You raised in excess of $100 million. Like, you know the game. Are you moving into more of a SaaS model yourself?
Well, in terms of when you say SaaS, you mean the delivery of our product, or
Correct.
or the companies we support? It is very much
product,
of a Yeah, it is very much of a SaaS product. So, you think of it as a platform of sorts, but it's delivered through a SaaS mechanism, right?
Mm-hmm.
So it's absolutely a subscription, usage-based primarily, but a subscription.
And so what are people paying for you, and how much are they paying per month on average?
It ranges from, first of all, it starts at free. And it goes, the largest customer today is at about $20,000 a month.
Okay. And what do they pay for? What's the big plan?
They just have, hundreds of thousands of, they've web scaled. So they're a marketplace that has, hundreds of thousands of MAUs, of monthly active users.
Okay. And what would you say the average customer is paying per month? A couple hundred?
Really got to break it down into just two segments. So if you look at sort of the product-led growth side, where people can come in for free, begin paying, and so forth, the economics on that side are very different than the ones where we have more of a B2B engagement. So on the average customer on the product-led growth side is probably somewhere around $100 a month. Okay. And on the B2B engagement side is probably closer to $1,250, $1,500 a month.
Okay, interesting. And how many folks on the self-serve model?
The self-serve is somewhere around 6,000. Those include free. Okay.
So to say, holy crap, you were at 1,000 a year ago. So how many actually paying?
Yeah. Somewhere around 1,200.
Yeah. Okay, good. So 200 new customers in the past, call it 6 months or so. Where did you find those customers? How are you growing?
Those are, we're doing marketing to drive that, different forms of marketing. But our main thrust over the last 12 months has really been on the B2B side.
Mm-hmm. And tell me why or how, or why is that the focus?
Two reasons. So bigger dollars, better retention, and we're getting ready to release this new part of our product, which is all about front end development.
Mm-hmm.
And so that's going to offset a lot of the services that we do today.
Mm-hmm. And so again, how should people think of you? The headline says build amazing digital products. It looks very widgety, drag and drop, but then you also have like a developer link in your top and services link in the top of your thing. So like, how much of your revenue over the next 12 months do you think will be services versus SaaS?
Services still, the mix is changing. Services still makes up the lion's share of it. Non-recurring revenue now is somewhere around 50% of our overall revenue. Mm-hmm. So recurring revenue has grown quite a bit in the last, we don't publish the absolute numbers, but recurring revenue has grown, a couple 100% in the last 12 months.
Yeah, I guess I can take the 1,200 paying on the no code version. This isn't getting all your revenue because you have enterprise accounts, but 1,200 on the low code version at $100 a month is, $120,000 a month in revenue there.
Yeah, we're well north of that. But
will you break 2 million run rate this year? Or have you already broken it?
We have overall run rate. Absolutely.
So how aggressive are you trying to be this year?
We're trying to do triple digits overall.
Wow. Okay. So, do you think you can break like a $5 million run rate this year? Is it doable?
Maybe.
Like, is that a comfortable goal or like a stretch goal? All right. Fair enough.
Come on. I told you we don't publish a number.
All right, but now we know. Now we know between 2 and 5. So that's it. I won't push you harder. Between 2 and 5, that's great. So tell me about the thing, because you're like in this beautiful spot where you have an agency that's done very well. You're taking advantage of like a no-code platform. You're building the platform now, higher margin revenue, no touch, etc. There's a lot of people that get stuck though, where they try and run both the agency and the platform at the same time, and neither one scales. Will you ever shut down the agency completely and go all in on the SaaS, even if revenue takes a hit?
Sure, absolutely. We were never founded to be an agency. I mean, although it sort of looks like that, what it really is professional services to implement our platform. So if you look at the history of enterprise SaaS in general, that was always the case, right? So you needed help implementing products. Even though our product is self-service, a lot of times we run across non-technical founders, et cetera, or even larger enterprises that can't find the talent to use it and want our help. And we do the services side at a world-class level. Mm-hmm. But the idea is that over time, we will transition the services side to an ecosystem of providers, which we've begun to do. We've begun to do that. Like we have a small ecosystem of them now, and we have our product. We have a product that's APE-based for the agencies to do that's a little bit different than the core product that you see on the website.
Have you raised additional capital since 2019, or still about the 2.8 million total raised?
We've closed. We did a price round and closed. The overall closing was 4.8. That includes the conversion of everything before.
Yep. So you raised 2 million new.
Something like that. Yeah.
Why did you need to raise?
I wanted to raise to put more money on the balance sheet, given the heavy investment that we're making in both growth and in product. Especially, remember, we're launching a very significant new capability in our product, which is the front end development. So we may do a larger venture round coming up, given sort of the metrics we put up and the opportunity that we're looking at. We're evaluating whether we do a larger venture round now.
The 1 million seed in 2017, 1.8 in 2019. If you raise just 2 million now, I mean, would you call it a Series A where you're selling 10 and 20% of the business? Would you call it something else?
Yeah, I would say it probably is a Series A.
Yeah, interesting. So, like, what performance metrics do you think you need to get to before you can go raise a competitive Series B?
Oh, a Series B? I'm not even thinking about that right now, but.
Well, then that's a bad question. Then let's focus somewhere else. Then
maybe I misunderstood. Are you saying the new round would be a Series A or the?
Well, no, the 2 million you just raised. You're raising it to go hit some metrics. What metrics do you want to go hit?
Yeah, so we didn't really call that a Series A. We called that more of a Series Seed. But if we pursue a larger round, it would be a Series A. The metrics, I think the metrics we would need for that are pretty much there, which is, growth rate of, recurring revenue, a stable set of clients that have exceeded, recurring revenue, at least of $1 million in ARR, which, that's not an issue. Obviously an enormous addressable market with a huge unmet need. And I can explain a little bit more about that. Because you might say, well, low code, there's a bunch of stuff, but I can explain the difference. And then the other really good headline is our net retention rate. So if you look at where we start to where we end up with a client and revenue, you see a very significant increase in usage and upsell that happens. So our net.
What is that net dollar retention?
It's somewhere in the 135 to 140 range.
That's great. That's very good. And what's your team today? How many folks?
It's we're approaching onshore and offshore. We're approaching 50.
50. Where onshore? Where do you like to offshore the most?
We have an office in St. Petersburg, Russia, and we also have some folks in Latin America.
How many engineers total, including the offshore talent?
Engineers total is probably it's above 30.
Yep. Yeah, it was 20. It was 22 back in August of last year.
Yeah.
So 30 now makes sense. Interesting. And are they mainly spending their time building custom solutions for your clients or building your platform?
Both. So it's a split team. So some of the team works on core platform, and then other part of the team works on professional services.
Mm-hmm. And is it fair to say, I mean, what's in the market right now? I haven't raised recently, but when you go raise 2 million, are you selling the pretty, the standard 10 to 20% in the Series seed?
So let me think about that, Nathan. So no, we sold less than that.
We got it. So that's great, because usually with a Series C, they have like an equity target of like 10, 15, 20%. You were able to convince an investor to take less, which means less dilution for you.
Yeah, look, I largely did it there's some new investors, but largely did it as an insider round. And because we throw off significant gross margins from the full service work we do, we didn't have a huge cash need. So
Yep. Very cool. I would ask you what your valuation is, but you're not going to tell me, but I would assume it was north of $20 million if you sold less than 10%.
I'm not going to tell you.
I'm not going to tell right now. You guys have to read his body language and figure it out for yourself, YouTube. All right. Okay. Very cool, Albert. Where's growth going to come from, man? How are you going to get up to 5, 6, 7 million run rate?
Yeah. So look, we're gonna a lot of it, Nathan, is going to be as we release the full low code product. The front end development is going to be a major thing. So today, I'm sure that 99% of the founders that you talk to that are building anything that really needs to scale are doing it from the ground up. You're probably seeing more and more low code, but a lot of the platforms that are out there for building digital products, they sort of break down at a certain scale or a certain level of complexity. We're trying to totally transform that so that you're thinking low code first. You build an MVP, because it's a good thing to build an MVP, but an MVP that is light on features, not light on architecture. And so you can incrementally get to where you need to go and scale and truthfully never have to get off of 8base unless you're a really, really big company with a certain set of requirements.
Yeah. Guys, there you have it. Albert, we're rooting for you, man. Let's wrap up with a famous 5. Number 1, favorite book.
My most recent read was Blitzscaling. So I'm going to go with that right now.
That's a good one. 2, is there a CEO you're following or studying?
Oh, wow. CEO. Shoot. Yeah, I'm going to say the MailChimp founder.
Yeah, Ben Chestnut. Number 3, how many hours of sleep? What's your favorite online tool for building 8base besides your own?
Favorite online tool for building 8base? It would definitely be 8base. Man, I'm going to go with the boring, sort of InVision. But
InVision. Yeah. At least you didn't say Gmail. Okay. Number 4, how many hours of sleep do you get every night?
I'm shooting for 7. Sometimes it's 6, sometimes it's 8. But I've learned that my performance and my sleep are very much directly correlated.
And Albert, married, single, kids?
Married. Kids.
How many?
Married for a long time. 4 kids.
Wow. Okay. How old are you?
I'm 53. I'll be 54 in a few days. Yeah.
Hey, congrats. Happy early birthday.
Thank you.
All right. Take us home here. What's something you wish you knew when you were 20?
Oh, man. I'm probably going to give you the same answer I gave you the last time. But I'm going to say that it's like, at the end of the day, like as a founder, we're always scared to death about risk and failure and so forth. And the truth is, at the end of the day, you just got to go for it. And life's too short. At the end of your life, you're not going to care. You're going to care about the risk you didn't take.
Guys, 8base, founded in 2017. They raised about $4.8 million to date, serving over 1,200 sort of no-touch customers. They use the platform to build their no-code products and MVPs from scratch. And they also have an enterprise cohort as well. Call it north of a $1.52 million run rate now, hoping to scale to $5 million here quickly as they look to scale their platform revenue faster than their pure agency revenue. They are doing that 135% net dollar retention to date as Albert continues to scale. Albert, thanks for taking us to the top.
Thank you, Nathan.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.